Welcome to This is Property with John Pidgeon and Rachel Kroon. Rach, today we've got a good news story on the line. Eloise is joining us. She's well on the way to building an extremely successful property portfolio, I would say.
Yeah, it looks fantastic, Eloise.
Thanks.
Eloise, welcome. We're going to dig deep into how you first started out in property, but then the journey or the steps that you've made to put you in a magnificent position that you are in now. But then also it's important to note what's next, because property is a long journey, and I think in my mind, her and her partner Liam, they're just getting started. Eloise, welcome again. Great to have you on. Rach is going to hit you with some hard-hitting questions about your journey growing up.
So it's always good to find out what people's relationship with money is and how it started. So were you a saver as a child? What was your relationship with money like, Eloise?
Sure. I would say that I was a saver. I pretty much worked from a fairly young age, kind of got a couple of hours after school jobs and squirreled that money away. I guess one of my big things that happened when I was a kid that I thought I needed money for was, if you can't already tell, I'm from the UK. So it would be like a shopping trip to London or something where I knew I would need at least £100 to buy anything and spend the day there. So that was always something that I kind of saved towards. Otherwise, I always remember just squirreling my cash away in a pillow by my bed, mainly to hide it from my brother or anyone else. And then eventually, save a bit more.
And did you find, how did that come about, do you think? Do you think you were you saw someone saving good money to be able to do some cool things in life, or did you just think that was just in your nature? Like, was it your parents, or was it just you, that's your genetics?
Oh, I don't know, because compared to my brother, he was a spender, so that's why I had to hide my money from him. So I guess I just, but it's hard. I think it was kind of in my nature myself. I didn't really have. I had my parents as an influence in terms of what they did, but it was mainly in terms of the fact that they worked hard, and we wouldn't necessarily say that we struggled as such, but then I think it was the knowledge that I needed my own money to do what I wanted to do. I wasn't just going to get given everything that I wanted. So if I wanted to go on that shopping trip, if I wanted to go and buy those clothes, then I needed the money for it. And, that's when I obviously got the job when I was younger, like after school, 13, and then it just went from there, worked through the school holidays. And I guess eventually as I got older, I wanted to go traveling as soon as I'd finished all my education. So there was also that goal to save towards, which I achieved and went traveling for 6 months or so and ended up in Australia. And then here I am.
Oh, fantastic. So did you travel and stay here, or did you go home and decide to move back?
I travelled and stayed here. So I first went to Southeast Asia for a few months, New Zealand for a couple of months. My brother had already moved out here, so he was already here. So it was kind of like a turn up on his doorstep and say, hello, I don't have any money. I need to stay on your couch for a month or so till I find a job. And then, away I went. So I think I always had it subconsciously that I was going to be in Australia. And my parents always encouraged it. They didn't really encourage us to come back to the UK. So here we are.
He would have been happy to see you in Australia, given that he was a spender and you were the saver. You could have helped him out somewhat once you arrived on Australian shores.
Yeah, he'd grown up a little bit by then, so it was his turn to look after me.
Yeah, nice. So how old were you when you moved to Australia, Eloise?
I was 22, so I'd basically pretty much finished my degree in the UK and a master's degree. Did a degree in economics and then a master's course in international management. And I knew that if I didn't leave as soon as I'd finished studying, then I would have ended up getting a job and just staying in the UK, and it would have made it that much harder to leave. I just went for it.
Yeah, great. And what started your desire or passion to want to start investing in property?
I think it was when I got my first, I guess, main job with the bank. I got a role in a top four bank, and I didn't really have a specific role in mind. It was just the role that was recruiting at the time, and I wanted to work for a big four bank. I just had that in my head that that would be a good start to my career in Australia and have opportunities. So I was just kind of gunning for that. And the role happened to be a mortgage credit assessor for broker home loan applications. So I kind of landed on my feet, I guess, and really took to it, and the details. And there's so much to it and the policy and learning all about that. So I guess from there, knowing all about the finance side and the mortgage side, kind of took a little bit of the uncertainty or fear away of investing and buying property.
Yeah, it's an interesting point. And I told the story previous of my uncle who was a bank manager in regional Victoria and how he saw all the wealth come through the bank, obviously confidential, but understanding what they were doing and the decisions they were making and the risk profile that the clients that he had were how they were operating at what level to create that wealth. But so was that. Was that the same for you? Like, did you see these examples or stories of, oh, okay, this is what they're doing, this is how they're doing it, this is how they're taking action, this is, as you said, the bank's policies and what they are allowed to do and what they can't do? Did it give you like I suppose, a shield of armour of confidence to be able to say, well, I can actually do this myself?
Yeah, I think so. I think that, and I was trying to think, it was hard to trigger really what the property side of it was. I think it then came through listening to the podcast back in the day. Just found it really informative to learn about the property side. Obviously, I kind of had the mortgage side down pat, but then down to the property, it was kind of, well, what made a good property, what made an investment property, and then I just our long-term goals of what we wanted, myself and my partner Liam. Luckily, we were on the same page, which I thought was, well, which I think is super important because we did consider an owner occupied at the beginning, and I guess this was 2020, 2021, the prices were just starting to skyrocket and we weren't ready to move out of Sydney at that stage. So I think that just turned a corner for us in terms of just putting that plan down and just focusing on investment. And we haven't really looked back since.
Yeah, great. So first property, what steps did you take to get the knowledge that you needed to buy that first property? How did you decide what to buy first?
Definitely binge listen to John's property podcast, all the episodes to learn. I did. I binged pretty much all the episodes. I was just trying to gain all of that knowledge and the discussion points of of the good and the bad and what to invest in and what not to invest in. In terms of areas, I think just through being in the mortgage space and seeing areas come up and doing valuations and being on the property, I guess, in that kind of space. We'd had Queensland in our heads and specifically Gold Coast. And, you know, we'd talked to a couple of other people who'd invested in that area. And I guess then from listening to the podcast and we just kind of went from there really in terms of what we wanted and getting the numbers down to the budget. It's hard to say really because the property itself, I think it was more the location that we wanted. We knew we wanted a brick build. We wanted a house, not a unit. And then it just came down to the numbers and the budget and having the conversation with John to get the steps underway, I guess.
It's probably the common one, isn't it? It's like, well, how do I make a start, and it's often, it's extremely daunting for a lot of people, but it probably comes back to how much can I spend and what am I comfortable spending? That's usually the starting point for most people, would you say?
Yeah, definitely budget. We had a certain amount of savings, so that already limits you. I think we'd obviously foregone any kind of first home buyer, stamp duty benefits. We'd obviously made that decision not to go ahead with the owner occ, so we just turned to investment. And again, luckily, with myself working for the bank, going through as an employee, we were able only to put down a 10% plus stamp. So I guess that gave us some freedom and, in a low interest rate environment with both of us full time working with no kids, our borrowing capacity was good. And I can do my numbers and I do that every single day. So then doing that for myself and seeing that we had a good buffer there definitely gave me confidence that this was definitely doable. And then it was just a case of we started with a clarity call with yourself, John. And that definitely gave us the confidence to just go ahead and pull the trigger.
So do you want to go through the numbers before we go to a break? What was the purchase price and what did we end up getting, bedrooms, bathrooms, etc., and what did it rent for in the beginning? And what did that look like for you given the current lending climate, interest rates, etc.?
Yeah, so our purchase price, our max budget was 700,000. This was back in 2021, and that was a 10% deposit plus stamps, I think, and costs.
Yeah, so 100K roughly in.
Yeah, exactly. We had 100K from our own savings, and that bought us a 4-bed, 2-bathroom, 2 parking spaces, 600 square meter plot in a suburb, I think just slightly inland in the Gold Coast. It was Pacific Pines specifically. The property was already tenanted, so that was a plus. We bought it sight unseen. I believe it was just at the start of COVID or in the middle of COVID. We were comfortable with that. Just because the type of property that it is, a sturdy brick built property, we saw the video of the internal, there was no major defects or anything that was noticeable. And also, insurance and building and pest and things, we weren't overly concerned about having to go look at it ourselves. It wasn't for us at the end of the day. And the fact that it was already tenanted, obviously didn't want to go in and disturb anyone. So I believe, I should have looked at this before, I believe the rent was maybe about $450 a week currently. So we knew that was under rented. That they seemed to have an agreement with the previous owners and a relationship there with the property manager. So when we bought it, I changed property managers based on them advising or saying a potential increase in rent, but it was way below market rent. And, I could see market rent through my job and just by looking on realestate.com and what other things were, other properties of similar build were renting for. So we obviously wanted to get it up to market rent as soon as possible. I believe we probably put it up to 550. So I guess it was quite a big increase at the beginning for the tenant.
Gold Coast has had a big
That's
rent
a big
increase.
difference.
Yeah. But
in the first increase, yeah. And it's gone up a lot since then as well.
Yeah, and that period of sort of, post-COVID, especially Gold Coast, it's probably one of the major areas in Australia that's had the highest rental increase. So, yeah, it doesn't surprise me that it jumped initially because it was under-rented. But, that's probably renting for $750, $800 a week now, is it?
Yeah, just a little bit, I think, 830.
Yeah, wow.
Yeah, so in that, being in that broker space or that finance space, you could understand your numbers, you knew what you could lend, you knew what the running costs of the property would be, you listened to enough to be dangerous, to say, well, yeah, this is actually going to be okay for us. The interesting part, Rach, is the sight unseen. First property.
That is very bold for a first property.
I'm quite decisive.
Yeah.
She's on a mission. It's like, okay, it's got to be bricks, and the bricks aren't going to fall down. Subject to building and pest, I'm assuming, Eloise?
Yeah, of course. We did still do the due diligence, and luckily, Liam, my partner, he's a tradesman, so even though he wasn't there physically, I think, again, a brick build is, I think there's a saying, especially a UK saying, you can't go wrong with bricks and mortar. So I think we were pretty confident in that. We were confident as we were using you as our buyer's agent, John. So we were confident in it ticked all the boxes. So
That's fantastic.
I think we had a good deal as well at the time. I think it was right on our budget that we bought for, and the situation with the vendors was quite favourable. So yeah, we just went for it.
It's hard to believe that it was just in 2021 you could buy there for $600,000. As I'm looking at this now, it just seems so. It doesn't seem that long ago, but it was. It's such a big difference. So I think we need to take a short break, but when we come back, I'd like to ask you some questions about property number 2.
This is Property is brought to you by Sphere Home Loans. Sphere Home Loans is a mortgage broker that helps our listeners all around Australia. So, if you want to get into your first home sooner, looking at upgrading, an additional property, or want your current mortgage reviewed, just search Sphere Home Loans or click the link in the show notes, and their dedicated brokers will be able to help you wherever you are. If you are, however, after personal financial advice, don't get it from a podcast. If you would like help based on your own personal situation, head over to moneypodcast.com.au, click Get Help, and we'd be happy to introduce you to one of our trusted professionals. That's moneypodcast.com.au and click Get Help.
Okay, we're back. Eloise, brave effort getting in property number 1. For you, it seems though it was water off a duck's back. It was just a process of what you wanted to go through. But yeah, how was Liam through this? Like you mentioned, he's in a trade, and obviously he's not here to defend himself today. But you mentioned you're also on the same page. Were you having I shouldn't say equal conversations, but were you like in agreement with everything going forward? Were you the one leading it? Was he supportive? Like, how was it? How was the behind the scenes operation going? Because we did a podcast a few weeks ago, Rach, on partners and how we may not always be on the same page. But it sounds as though you guys had each other's backs.
Broad sense of this is the purchase price, this is the rent. I mean, it's hard to say exactly what he is interested in or not. I think he's on par with the goal.
Yes.
The long-term goal of the investing. And I guess I listened to all the property podcasts. I don't think Liam did. Sorry, John. I think I explained it to him in as much or as little detail as he wanted. And I think he's also smart or savvy enough to understand the merits of it, and the growth and what can then be done afterwards, not in as much detail as me, but like I say, we're just both on the same page in terms of the goals. So, I always kept up to date. We talk about everything. We go across everything. We don't make decisions without each other, but we haven't ever really been in disagreements. I think having the clarity call for ourselves with yourself, John, before we decided to use your buyer's agent services was definitely the boost or the confidence that he was on board, just because we knew that we would be entrusting our purchases with a buyer's agent, and we wanted to have the right person and the one who would make sense for us. I think just during that clarity call, it was just a good sounding board where you didn't really mince your words. It was this and that, and just allowed you to just talk about the goal and have that subjective view. Because we'd spoken to a couple of other people before, and it was always just like a bit salesy and just like, well, we won't tell you this until you give us this and things. So he doesn't have that much patience for that. But then once he's sold, and he was sold with you guys. So yeah, we were all in.
Yeah, great. So obviously you've done very well off that first property. Can I ask when you decided, like when was your comfort level ready to think about going again?
It was pretty much immediately. We'd already had it. So I guess a little bit of context. We'd lived in Australia for 10 years now this year. At the time, we were pretty much already ready to go. We had to wait until we had a permanent residency visa granted before we could buy property without incurring like crazy stamp duty costs. So we were already ready to go. We were just waiting for that visa to get approved, which we knew was just a matter of time, and it took time, a lot of time. So we were already set up. So I guess once that had got approved and the barriers were out the way, we were gunning. So we had the deposit from our own savings. Luckily for the second property, we had the same deposit from a gift from my parents. So in my mind, there was two deposits there. There was the borrowing capacity. I still had the advantage of just a 10% deposit. I guess on reflection now, knowing what I know now, we could have maybe gone for one property and did a bigger one with a bigger purchase price. But I just think at that point with our first one, I think going into like the $1 million was just like, wow, that's like really big. And getting a big, mortgage like that just seemed probably too big at that time. Yeah, given the first, but we were happy going again pretty much immediately after the first one settled. We were ready to go.
Yeah, it's a really common one, isn't it? I can borrow 1.2 or 1.3 mil, but that freaks me out. I'll probably stay awake at night, and also the yield's going to be lower as well, so the holding costs are going to be greater on that one asset. It's probably going to be a better asset long term, but it's not for us this time around.
Yeah, and I think spreading the risk, not putting all your eggs in one basket. We were happier splitting it into two.
Yeah, great.
So what did that second property look like, Eloise? And like we talk about, there's two things that stop you from buying. One is mindset, the other is lending. You had both of those in spades, so you're ready to go straight away, literally. Most people want to come up for air, but Eloise wanted to take action straight away. What did that look like? Where, purchase price, rental, etc.?
It was very similar. So we had the same budget again. We had a $700,000 budget, again with 10% deposit plus stamp, so $100K to cover costs. We still liked Queensland. I think purchase price driven that location. But obviously, well, not obviously as such, but we didn't necessarily want to buy in the same place again, kind of spread our risk. We'd seen Sunshine Coast. We'd heard about Sunshine Coast. It's hard to think back in terms of exactly what triggered that in our heads. But I think when we use John as well, he gives us all the data and things like that, all the metrics of various locations, which we look at, and in the same kind of instance, all the numbers and the data all added up in that location. So we were good to go again.
Yeah, great. And was that in 2021 as well? So the same year?
Yeah, that's right. I think we settled our first in maybe September 2021. And I think we engaged John's services again maybe October.
Oh, wow.
Like pretty
very
much just
close
after
together.
it had settled. So we purchased in July-ish and settled in September. And then I didn't expect John to come back to me so quickly, actually. I hadn't got a pre-approval on that in place, but I was just like, it's sitting there ready to go. So I just said, oh, John, I think we're good to go again. And then it just went really quickly from there.
I actually remember having this conversation with you, Eloise. I'm like, okay, if you're up for it, I'm up for it. And I actually remember where I was standing when I was having this conversation with you, because it was so, the ink had hardly dried on that first property. But and this is why I wanted to get you on, not to spruik my BA service, but to really just understand that having a really good mindset around taking action is imperative to build a portfolio. And it was literally 2 months, not even, before you purchased that second property.
Yeah, definitely. I think, again, I didn't necessarily have concerns in terms of my financing because I worked in the business and knew I could get a pre-approval in a few days. I didn't necessarily expect John to find a suitable property so quickly. Or just literally, I just kind of gave him a heads up. It's like, look, John, we're looking to, purchase again soon. And then it was, I think, almost same day, if not next day. And I was like, oh, goodness, I better get my pre-approval in to get this done because it looks like he's found us something already. And it was a very similar brief. I think it was another 4-bed, 2-bathroom, 2-car space, 600 square meter plot. It was very, very similar, just in a different location up in Sunshine Coast. Again, it ticked all the boxes, that made a good property from all the data that John provided and the metrics against, everything that I knew of through learning through the property podcast. It is the same as what you teach, John. So I guess having that trust and that confidence, again, I believe this was again sight unseen. I mean, again, it was COVID. I can't remember if it was tenanted at the beginning. It may well have been. I think it may have been. Yes, I think it was, because I think we've had both of our places when we first bought were already tenanted. So again, that was another worry that we didn't really have to, worry about. We're going straight into having rental income against those properties. And again, I think with our borrowing capacity, myself and Liam working 2 full-time secure jobs, and it just being us two just renting in Sydney with limited other expenses, that, we were just, again, happy to go for it.
Yeah, great. So you've got 2 properties now in the space of a few months. How long did you wait until you considered thinking about going again?
Well, this one, they were set and forget, so we put them on fixed for 3 years. So a fixed rate mortgage.
At the right time?
At 2%.
Yeah.
yeah, at 2%. I remember being a little bit upset that the second one was just a little bit higher than the first one. But obviously looking back now, I was just like, I wish I locked that in for 5 years. Yeah. I guess I had that in my head through the journey and going through my journey through finance. I think after a few years or so, I'd left the bank and moved into a different role, and then ended up in a mortgage brokerage where I am now. And I guess through that journey, I learned a lot more about the structuring of a portfolio and how to generate those next moves. And I think at the beginning, just working for a bank, you don't really get that structuring piece and the kind of future planning. The banks don't give you that. It would only be through my own learning or my own journey that I would have got that. But then going to a mortgage brokerage, it really put that into the forefront. I think being on a fixed as well, I almost had it in my head that I couldn't access the equity as such, or like that it was like a don't touch. It's just on fixed. So we just let the properties run for 3 years, and it wasn't until the fix was coming to an end that I looked into it and I wasn't surprised that they'd gone up in value. I did know in the back of my head that they were all doing fine. We were cruising along quite well, but I did also know that on the back of my head that these fixed rates were going to be coming off soon. So it was just a case of running the updated numbers and seeing what kind of position that we were in, to then see what equity. I knew there was equity there, but then it was just going back to the numbers, seeing what I could borrow, looking at a refinance, seeing what the rate and the cash flow was at the time. And evidently it was favourable again, at least for the next one. So yeah, it was after the fixed rate. So we set and forget for 3 years. And then we at this time, just now, I guess in the past few months, we've gone again.
Yeah.
So how much did that hurt you sitting on your hands for 3 years, given that you purchased 2 properties in 2 months? Did you look back and say, well, maybe we could have purchased sooner?
Yeah, I think so. I think on reflection, we could have accessed that equity sooner. I think maybe a reason why we didn't was when I left that role or left the bank. I didn't immediately go into a mortgage brokerage. I had a gap, maybe of a year or so, in another role before I went into that brokerage. So I didn't know. I didn't have a broker at that time because I'd done the financing myself, or through the bank directly. So I honestly didn't know. And by the time I'd left the bank, I didn't necessarily have the tools to run a valuation and see. And I guess also at the time, it probably wasn't forefront of mind as such. They were doing fine. I knew they were on fixed. I didn't really worry about it. So I guess it was then when I picked back up in that role again and really got I knew that we'd had to refinance and then go for the equity release. But being in a brokerage, it definitely opened my eyes to a lot more of the future planning and the structuring of getting more than 2 properties.
Yeah. So tell me, when you rolled off fixed and obviously you needed to refinance, what did the properties value up at that point? So you bought them for 600,000 and was it 700,000 for the second?
700.
So
700,000 on the first,
Yep.
and the second purchase price was actually 675.
675. So that's 3 years passes. What did they value up at when you rolled off the fixed?
Well, that was another part of being in a brokerage. I could run multiple valuations with multiple.
What was the best one that you got?
Well, I went with the best one, funnily enough.
Smart.
I think it was 1.038.
Oh, wow.
For Pacific Pines, so 1,038,000 valuation, which gave us a significant equity. I mean, you could do the calculation. We released, I think, 280,000 in equity, as well as the refinance to 80%. So that was based on an initial 90% lend, and then we refinanced at 80% and still managed to release 280,000 worth of equity.
Yeah,
Wow.
well, that's a good result. And the Sunshine Coast?
The Sunshine Coast, I think we got, I think it was about 980 or maybe 930 odd, I think.
Yeah. So suddenly you've got a lot of equity that you can use.
Yeah.
And a
That's
portfolio that's also wiping its own face. The rental increases have allowed, even though the the interest rates have increased, the rents have increased alongside it because that's just what happened through that period, to the point where it was pretty much the portfolio is looking after itself.
Yeah, it was all manageable. I definitely knew when coming off these fixed rates that the cash flow was going to be, we'd have to put in money towards the properties for sure. After having 3 years of probably positively geared, only by a little bit, but they were still positive. We knew that we would go into the negative space. It was again a case of doing our numbers, working out our cash flow, I guess in a bit more detail, just to see exactly what the impact, because it was going to be, it was quite a lot. But again, our personal situation, I guess, hadn't changed. We were still both working full time in secure jobs, pay increases along the way. It was still without that much personal expenses as such, or nothing that couldn't be reduced if we really, really needed it. So the goal was still to keep going, investing in the properties and making that work. It was still our primary focus. So I'd make it work.
Yeah, awesome. So you've gone on and purchased the third property in regional New South Wales, and you're also in the process of purchasing a fourth property, which will hopefully be done quite soon. But what do you think is the future for you guys? Like you've got a sizable portfolio now, but in I suppose relative terms, it's only just started. Like it's 4 years old. The commencement of the portfolio. So your journey is really in one way just beginning.
Yeah, it's definitely a long journey. We definitely have the long-term focus in mind, as much as I probably get impatient a little bit. But it is kind of a means to an end, I guess. Through getting property, we want to be able to eventually kind of ease off on both having to work full time as such, just kind of get a bit of time back in our lives, go traveling, I guess. We do have the fact that we're still renting in our minds, but we currently know that at this point in our lives, work, I guess, is our primary focus in these years. And for that, we are still based in Sydney. But long term, I don't see us wanting to stay in Sydney. We'd probably move outside the city to somewhere a bit more regional, where hopefully we would be able to maybe sell down our portfolio in the future to purchase an owner-occupied property with little to no debt, as well as maybe have a couple of properties left over to either consolidate into a more cash flow positive, investment, or, if they're generating the cash that we need, then keep them going. It's just what it would be at the time. And in between that time, if we're still able to buy more property to just increase that asset base, and let it grow for the future, then we can do that. I'll always be kind of keeping an eye on the numbers and things. And if I can get any more equity out and get another property, then I will. But again, borrowing capacity then does become a factor. So I think after this next purchase, because we've done 2 and then we've done 2 again, this is our 4th one. So 2 and 2 in quick succession. I think then I'll be leaving it there for a few years again, and then reviewing in the future and taking it from there. You've got to give it time to grow. So we'll see how it goes.
You do. Sometimes you do need to give it time for those rents to increase and things to change a little bit, so it does make it comfortable and affordable to buy again.
Yeah, definitely. I think the cash flow at the moment, even though the rates are coming down slowly but surely, which is definitely a help. But I think the fact that we've been buying properties through what hopefully is one of the worst periods. I mean, I'm sure it could always go back up again, but I guess having that experience of having a low interest rate environment and a high interest rate environment, and we've still managed to stay afloat and buy property as well. I think that's probably a positive. And I think for us, a worst case scenario of having to sell, if we really had to and our circumstances changed on an emergency, I think with that in the back of our mind, there's no reason not to just keep going.
Yeah, look, it's awesome. And I think I'd like to add there that we do have your incomes on page here, but I'm not going to reveal them. But I want to say that they're not what I would say high Sydney incomes that we see from day to day. So that's the other impressive part is the borrowing capacity is okay, but not outstanding. So you've basically made men's ends meet basically with what you've got and taken action accordingly, which I think is outstanding. But looking back over the 4 years, Eloise, what would you have done differently? Is there anything that you look at and say, yeah, I would have done this instead of that?
I think perhaps maybe getting equity out earlier, and buying another property earlier. Maybe that could have got us, not that regional is a bad location, but I understand that we're probably not going to get the growth that we got on our first 2 properties, given those locations in Queensland. We maybe have been able to get more of a central location close to a hub, maybe at a different purchase price, if we'd have moved earlier, and got that equity out earlier. But then maybe comparatively our property wouldn't have grown that much as much, that we wouldn't have been able to get X amount of equity that we did. So there are different things. I think not locking in a 5-year fixed rate rather than a 3-year fixed rate. I think, but nobody can have a crystal ball. I think we made the decisions in the environment that we were in with the knowledge that we had then. And again, I think it was better than doing nothing. I'm glad that we took action.
You certainly took some action. Eloise, you've done so much research and you've got so much knowledge, obviously, from what you do for work, but also the education you've had along the way. What advice would you give to our listeners out there of what your big tips or advice would be for anyone that's considering starting to invest?
I definitely think just get at least a bit of knowledge behind you and your team behind you that you can trust. I mean, myself, I enjoy the finance, so I just eat all that up. But not everyone is financially minded, and I think then listening to your buyer's agent, listening to your broker, who are the experts in those fields, and trusting in what they're telling you is probably the best that you could, well, as well as going and looking at it yourself. I mean, listening, there's so much knowledge out there, but I guess it is hard because there's too much, there's never too much knowledge, but a lot of conflicting advice. I think you would need to turn off the conversations maybe with your next door neighbour who's got a mortgage, who may have done something, because I think you've got to understand that everyone's individual situations are different, and the way that banks finance and the way that mortgages source your loan is tailored to your financial situation, and it doesn't mean it's going to be the same. So I think just focusing on your own goals and your own situation and what your team around you can tell you can do, and doing the best that you can.
Yeah.
With
Amazing.
That's great advice, isn't it? I took three things from what you've told us today, Eloise, that I want to share with the listeners. I think, number one, in no particular order, I think you and Liam being on the same page is really important, because often we see couples that are not, and one's pushing, the other's pulling. So the fact that you're on the same page, one's maybe leading, doing more of the research and the educating, but yeah, you're definitely level on a level playing field from that point of view, which is really important. Second one is you educate a lot. You brain dumped a whole heap of podcasts in early days, got your education, your skill set up, and you listened and you trusted the people around you. So that's very important. And then the last one, which is there in spades, is the mindset. It's like, well, it's going to happen. It's just a matter of how it's going to happen and when, and we're not knocking down doors to get a result. So combine those three things together, and we talk about it all the time. If you've got those three things alone, like, you can make things happen, can't you?
Yeah, definitely. I think that's probably a good summary of what we've done. And I think, sometimes in a worst case mindset, if you can sleep at night and you're okay with that, or having to sell and put down your mortgages so that you've got the cash flow back. I mean, it's hard. It's hard to say. Everyone's situation is different. But I think with us, we being just a couple, we didn't really have that many other expenses as such. So we were happy to maybe put more risk in our investing.
Well, seeing your portfolio after 4 years, I am so keen to talk to you again in 4 years and see exactly where that's up to again.
Yeah, definitely. Gosh,
yeah, look, there's over 3 mil of assets, I reckon, that's sort of sitting around there that, and we don't talk about the number of assets, or I don't anyway. It's more about the exposure to real estate, and once you get around those figures, you only need 3, 4, 5% growth on that portfolio for it to be doing amazing things in the next 10 years. You're still very young, so you've got the world at your feet in that sense. And as you said, it's the long game. So having that patience, which is sometimes hard for investors to have that patience, but to let it do its thing. And as Rach said, excited to see what comes of it in the next 4 or 5 years alone. And I suppose the other thing to note is we're doing this from Sydney, arguably the most expensive city in the country. And whilst you, I suppose, got a good result with your first property, the fact is you weren't on high income. You've saved hard. You've had a good money mindset, and you've taken action. So yeah, well done. It's been great to be able to chat to you today, Eloise.
Thanks, guys.
Yeah, thank you
it's
so
been
much
great.
for sharing.
So, look, thanks for coming on, Eloise. It's been a great journey for now, only 4 years young. And as you said, it's a long game that you're wanting to play, which is very smart. I've been inspired by your journey so far. We're looking forward, as Rach mentioned, about the long-term outcome for you. We'll check in again in 4 or 5 years and see how it's progressing. Thank you for allowing us into your ears today. If you do consume content, we are now on YouTube, so you'll be seeing us front and centre. In the flesh and well, not in the flesh, but on the camera. So yeah, check that out if you haven't already. Until next time, take care.
Any information given in this podcast is for entertainment purposes only, and you should seek your own property advice before acting on anything you may hear in this podcast. If you want to start or advance your property education journey, John Pidgeon's book, Sort Your Property Out and Build Your Future, is available where all good books are sold, or via the link in the podcast show notes. Opinions or comments from any guests on the podcast are theirs and not those of the hosts, the publisher, or their respective license holders.